Today, we are going to look at one important facet of mutual fund investment: how to allocate your money between debt funds and equity funds. Industry expert Gururaj will share his insights with you now. Gururaj, the screen is yours.
Today, small cap funds has given a return. 2017-18 value funds were doing well. It doubled your money in 1 year. Don't look at those returns and come and invest in that fund or the category. Don't do it. Equity means long term. You have to be there. The definition of long term can change. It could be 5 years, 7 years, 10 years. That's where I always say, boss, the term depends upon your goal. If you come and tell me, boss, I need to buy a car in 3 years' time, boss, it is a short term goal. Same, you are coming and telling me, boss, I want to plan for my retirement. I am only 40 years old, which means you have 20 years, right? That's a long term. So the long term definition will depend upon what is your goal and what is the time frame you are looking. 3 years means you should not even look at it. 5 years means some kind of balance advantage category you can look. 7 years means you can definitely look at the diversified equity. You have a 10-year horizon, yes, you can look at multi-cap, you can look at small cap, mid-cap, whatever you want, right? So that's the way I need to understand my where to take risk, right? So be clear on that. Yeah. So do that appropriate diversification, be it within the category, across the mutual funds. You need to take care of both. Right. Similarly, in debt means if you are looking at something like a bank FD, better to be in these short-term kind of funds, right? And as I said, tactical calls somewhere, some amount in credit risk fund, somewhere in the GSEC fund. All that you can definitely look at it.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also, you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.